This is Bloomberg Crypto, a daily Bloomberg iHeart podcast. And I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. It's Monday, September 26th. For investors trying to get exposure to crypto, there's many different options available these days. Products like crypto ETFs or exchange-traded funds are one of the more popular alternatives to owning tokens directly. But what exactly are crypto ETFs and how do they work? And what does it mean that many of the products pitched as ways to diversify your crypto portfolio are performing pretty similarly to each other? In the studio today to tackle these questions, we have Bloomberg reporter Katie Greifeld.
When you actually look under the hood and see these are all holding, the same 12 companies, they're all trading in the exact same direction.
Katie, welcome back.
Thanks for having me.
Tell our folks who you are and what you do.
I'm Katie Greifeld. I cover markets and exchange-traded funds at Bloomberg.
That seems busy.
It is busy. There's a lot of markets. I also really like crypto, so I try to do as much of it as I can.
And then you have this whole thing about ETFs?
Yes. So ETFs, they're exchange-traded funds. It's a basket of securities that basically you can trade intraday like a stock, similar to a stock. You can buy them and sell them on your brokerage platforms. But it's actually, again, an entire portfolio of companies.
So what's an example in crypto of a kind of a popular ETF, and why are folks, if I'm interested in getting exposure to crypto, why wouldn't I just buy Bitcoin?
It's a great question. The most popular ETF in crypto is actually not an ETF, but it would love to be. We're talking about the Grayscale Bitcoin Trust. You can buy and sell it intraday. It holds physically backed Bitcoin, but it's a trust. It's not an ETF. You do have crypto ETFs, physically backed crypto ETFs that actually hold Bitcoin and other coins in Canada, in Europe, but the U.S. SEC has not allowed that structure in the United States.
The SEC rejected Grayscale's application to convert its $13 billion Bitcoin trust into a physically backed ETF. And within the hour, the digital asset manager announced it would sue the regulator.
And if anybody's interested in catching up on why that is, we have multiple episodes that you can check out, and a ton of reporting from Katie. But okay, so there's these crypto ETFs, they exist. What problem do they solve for investors compared to holding the actual spot Bitcoin or anything else?
Well, if you're a retail trader, you might not want to set up a digital wallet. For example, the concept of, oh my gosh, I could lose my password or my keys and just never have access again. That's real. Maybe you don't want to use Coinbase. You've heard a lot about the fees, for example, or something similar. And if you're a professional trader, a professional money manager, an institutional trader, it might not be in your mandate. You might not be allowed to actually physically hold.
So somebody in a compliance department is like, nope.
Yes. But then you can say, oh, but this is an ETF. This is fine. This is under the oversight of the SEC.
What kinds of stuff exists in ETFs when it comes to crypto?
So because the U.S. has this regulatory structure that isn't like Europe, that isn't like Canada, and you can't actually hold Bitcoin in an ETF in the U.S., you've seen this weird sort of Franken-fund industry pop up. You have a lot of crypto-ish ETFs. They're equity ETFs that exist in the U.S., and they track companies that are related to crypto somehow. Think MicroStrategy, which owns a lot of Bitcoin, but isn't actually Bitcoin. And then you have a bunch of miners, for example. And I mean, ETF issuers, the saying in ETFs is that there's an ETF for everything, but there actually isn't an ETF for crypto. But issuers are trying. They've launched ETFs that claim to track everything from the metaverse to miners to NFTs. But if you look under the hood, they actually all just hold the same sort of companies.
As asset manager ProShares is poised to launch the first Bitcoin futures ETF. That'll trade under the symbol BITO. It'll invest.
It came out in October 2021. People were like, yeah, prices can only go up from here. What's the kind of stuff that's in that ETF?
So Bitto, I'm going to go with Bitto. So
Okay.
that is a Bitcoin futures ETF, and that is a very important sticking point for both the ETF and the crypto industry because futures are not the actual underlying assets.
Well, you're almost guaranteed to find yourself trading at another level than the spot price, right? After a few weeks, months, certainly after a year.
There is some tracking error there. It hasn't been as dramatic as maybe feared. And then if you think about the crypto-ish ETFs, one of the biggest out there is the Amplified Transformational Data Sharing ETF. The ticker is BLOK. So a block, a nod to the blockchain. Again, they all really hold sort of the same thing. You probably look at that, you see a Meta, again, not specific to Block, but sort of this entire industry. It's probably Meta, PayPal, Square, all of the different miners, and MicroStrategy. And if you look at the correlations between these, it's almost perfect. It's basically 0.9, which is extremely, extremely high.
0.9 as in one would be literally anything that happens, they all take exactly the same direction.
Yes.
So 0.9 is very, very high. And it's a result of exactly what you're saying. It's like, okay, let's say there's 12 things that go in an ETF. Everybody's slicing those 12 things in a slightly different way. That doesn't seem like a good set of options for somebody who's trying to look at these as a way to diversify their portfolios.
Exactly. You could see a retail trader, for example, who ETFs are very popular with. They provide access to markets that a normal individual trader might not be able to get access to. So if you're trying to create a portfolio that captures all these different themes within the crypto universe and you're trying to do that through ETFs, it's pretty much impossible. Again, when you actually look under the hood and see these are all holding, the same 12 companies, they're all trading in the exact same direction.
There are so many follow-up questions I have, but I will start with the Bitto sibling. Bitty,
yeah.
BITI.
Just gets worse.
I know. So same issuer, but is presented as a way to take a position on the market going down. How does that work?
Exactly. So that's another of these Bitcoin derivatives tracking funds. This one actually shorts the futures. So it's the exact opposite of its sibling Bitto. And it was the first to launch. And in ETFs, the first mover advantage is very, very important. But again, it's derivatives. So people don't love it as much as if I actually hold the underlying here.
So let's spend a little time on the derivatives themselves. You mentioned earlier about, the possibility of tracking errors as it relates to futures ETFs. What does that look like in practice? When somebody say, well, this ETF is a tracking errors of spot Bitcoin that makes it less attractive, translate that for someone not spending all their time on seeking alpha.
So this isn't actually the seeking alpha. That's pretty good. This isn't just unique to Bitcoin futures ETFs. This exists in all derivatives-based ETFs. Basically, you have a contract. You have exposure. Maybe it's a 1 month, maybe it's a 3 month contract. But in any case, no matter what it is, when you get to the end of that, the expiration, you have to roll forward that exposure so that you maintain it and it doesn't just disappear. And that comes with a cost. And people are thinking that with these Bitcoin futures ETFs, I remember spending a lot of time on it this time last year, was the Bitcoin futures curve is very upward sloping. So it's very expensive to roll that. But that's when Bitcoin was going straight up. And as we've lived through the past year, it hasn't been as dramatic as maybe feared.
Up next, more from Bloomberg's Katie Greifeld on how these crypto ETFs are acting similarly to each other and what that means for the broader market. For the people who do invest in the futures ETFs as opposed to the ones that hold, shares in Meta or Block, is this a function of I'm sophisticated enough to not be scared of derivatives? My compliance department lets me? What's sort of the investor profile that does one versus the other?
I would imagine that for those who invest in the Bitcoin futures ETF, they want Bitcoin. They're not trying to get exposure to the metaverse or NFTs somehow through this kind of tortured portfolio construction. They just want Bitcoin. And if you have done that, if that's the route you've taken, you've actually done better. It's a really interesting quirk that actually the crypto equity ETFs have performed more poorly than Bitcoin itself. I mean, the worst performing ETF out there right now, non-leveraged, is ticker RIGZ.
Rigs.
It's a Bitcoin mining ETF. It's down almost 70% this year. And last I checked, Bitcoin itself was only down about only 55 or 56%.
This seems like a bunch of bad options for folks who were or are trying to get crypto exposure and, you know, they really want to have access to spot Bitcoin. What are the prospects of, you know, that kind of pure play ETF in the US in the near future?
It feels like it really has dropped off the radar. I mean, if you think back to GBTC, which we talked about at the beginning, Grayscale is in the process of suing the SEC over the SEC rejecting their application to convert GBTC into a physically backed ETF. So people are watching the clock on that. That's a process that's expected to take several more months from here, if not a year. And then, I mean, you have others who are just waiting for Gary Gensler to no longer be chair. At this point, honestly, it doesn't feel like it's an imminent front and center issue for anyone right now. And it seems like it's pretty much dropped off the priority list of the SEC.
Just as kind of a closing thought, is this correlation, is this 0.9 like unusually high with it either to each other or, you know, to other parts of the market compared to everything that you're seeing in ETFs? As in, if I were a person and I was like coin tossing crypto ETF versus like a entertainment focused ETF or something else, like, is it that there's a similar level of underperformance because all the markets are bad, or is crypto really an outlier here?
It's true. I mean, in a down market, which we're living in across asset classes right now, correlations tend to go to one in times of stress. But if you pull up the charts of these correlations, I mean, they've been 0.9. I think this is close to the high watermark for a lot of these relationships between the crypto equity ETFs. But they always have a very statistically high correlation to each other. I mean, when I'm writing a normal story that's not about crypto, for example, and I see a 0.6 or a 0.7 correlation, I'm like, wow, that is so high. I should write about that. 0.9, I almost never
like, what?
say. Yes.
Like, what is happening here? Got it. All right. Well, thank you as always for being on the show. I heard, possibly directly, possibly Little Bird told me, whichever sounds more dramatic, that you're doing something crypto and showy that might be coming up in the not too distant future. Are you allowed to talk about that yet?
I don't know if I am. I can talk about it in case I am.
Excellent. And then we can just cut this if you're not.
Tim Stenovic and I, he is my co-anchor. We're putting together a crypto show for Bloomberg Quick Take. It's going to be weekly. It's going to be taped. Tim has been calling it a podcast first approach, not to try to encroach on your turf, but we want to do deep dive interviews. And of course, you helped us out with the first few episodes.
Which is maybe how I know about it.
I can't thank you enough.
Not a problem. Well, as soon as that is out in the world, I hope you will come back and tell folks where they can find it.
Big time.
Excellent. Thank you.
Thanks.
You can find more of Casey's reporting on the Bloomberg Terminal, on Bloomberg.com, on Bloomberg Television, on Bloomberg Quick Take, and on Twitter. She is at K Greifeld. That's KGREIFELD. On the next episode of Bloomberg Crypto, if you're listening to this podcast, you probably know who Sam Bankman-Fried is. You might even to explain to somebody else what FTX actually does. But have you heard about Alameda Research and how they're connected to the Bankman-Fried empire? Tune in for all the details. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. Or find us on Twitter, we're at Crypto. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producer is Mohammed Farouk. Associate producer is Moses Andam. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.